generative AI or Gen AI, banking, transportation, telecom, insurance, consumer, technology, finance, pharmaceuticals, all major consumers of it. But still, there's a sense on Wall Street that the party is already over for the picks and shovels leader, Nvidia. Well, my next guest says he's very bullish on Nvidia. I want to bring in now EMJ Capital founder Eric Jackson. All right, so Eric, you're a true believer that Gen AI will live up to the hype, right?
True believer. Dyed in the wool.
All right. So here's the thing. One reason the street is sort of not necessarily against Gen AI per se, but they've soured on Nvidia. They keep talking about increased competition. AMD just made a $5 billion acquisition. How close is the race for leadership there?
I still think we have a ways to go, Charles, because it's not even 2 years since ChatGPT first debuted. And I think we can all remember first playing around with ChatGPT and thinking like, whoa, this is like way more sophisticated than anything I've ever used before. And now we're up to ChatGPT 4. But you know that all these hyperscalers like the Googles, the Microsofts, the Metas, they're all working on their own models. OpenAI is working on ChatGPT 5 and 6. And there was an interesting video that came out last week with Eric Schmidt talking to some students at Stanford, where he said he thinks that each of those big companies is probably going to have to spend $300 billion on Nvidia chips over the next few years to get to where they want to go. And I think the reason why is that there was a podcast, Invest Like the Best, really popular finance podcast that came out today with an interview with Gavin Baker, where he said, Larry Page is quoted as having said internally at Google, "I'm willing to bankrupt this company because we have to win at this LLM war, this Gen AI war with versus Facebook and others, because we're creating a digital god here." And that's never happened. That's the race that they're on. They're going to keep buying Nvidia chips until that happens.
And it's so ironic. It was the Google earnings report that kind of sent these names tumbling in, and they said as much. I'm still confused what Wall Street saw in that report that spooked everyone. All right, let's talk specifically Nvidia in terms of these earnings reports. Street's looking for $28.7 billion. I want to point out to the audience, first quarter was $26 billion. They're also looking for earnings of 64 cents. What are you looking at? Let's just start on the revenue side. What do you anticipate that we'll see? Maybe revenue, operating margins, and earnings per share.
Sure. Well, I think it all comes down to the top line. I think people want to know that they didn't just meet expectations for the top line. And as you say, they're supposed to do something just under $29 billion in revenue for this quarter. But equally, if not more important, is what they guide to for the top line for next quarter. And so right now, I think the expectations are something like, around just under 31 billion for next quarter. Mm-hmm. So you ideally want to hear them come out and say, hey, we cleared the bar. We did 30 billion in the trailing quarter, and we did something like, 32, 33 billion. Is what we're guiding to in the next quarter. We know that they're going to have an incredible gross margin, 76% or something like that. So that's sort of like that's baked into the cake. It's all top line and it's all expectations. So there is risk that they don't achieve the high bar that's there. But that's what they guided to last quarter, and the stock, had a huge bounce afterwards. I think we're going to see that there's still insatiable demand for these chips. The Blackwell delay concerns is kind of like, it doesn't really matter.
I think that's starting to fade even ahead of this number. I got to jump in here because I want to spend a little bit of time. We only have about a minute or so. Everyone dreams of buying a stock that becomes the next Nvidia, right? Now, of course, you got to buy it and hold it and live through the ups and downs. That's the part no one really talks about. I read when you had a conversation with your son, and you gave him these three names, right? DeFi Technology, Open Door, and Upstart as potential 20 baggers. I never heard of DeFi. Tell us about it.
DeFi is in the crypto space, but they run a bunch of ETFs over in Europe. And they're a small company. They're less than $1 billion market cap. And that's one of the keys. If you want to find a 20 bagger, you got to start small. I love Nvidia, but to 20 bag from 3 trillion, that's going to be tough. Right. So DeFi is small. It's cheap. It has something like a 3x forward price earnings multiple versus people like Coinbase and Robinhood who have like 40x forward PEs. So I think it's just going to continue to do well and perform, and people will discover it. That's why I like it. The other two names that I like that you had on there before were Open Door, which is trying to be like the Carvana for realty. You can basically go to Open Door, type in your home, and they'll make you an offer. And if you want to, you can accept it right then and there. They're the only player kind of left over nationally to do this kind of business model. They're just on the verge of profitability. They've been forgotten about. They're sort of like a levered housing play, and the stock's been like trading in the doldrums for a couple of years now. I think they're about to wake up, right, just like Carvana has woken up over the last year. And then the last one is Upstart. People remember it IPO'd in late 2020 at $20, went to $400, and went back to $12. But now it's sort of come alive again. They use AI to approve people for personal loans and auto loans and this sort of thing. Now we have the tailwinds of the Fed cutting interest rates. That's going to help them. They could go back to 400 and beyond, especially